Today, we're joined by John Moore to discuss, when dealing with Medicare, how to best protect your client and how to create or structure a good settlement that benefits both parties. Before we get started, John, please introduce yourself and share with our audience a little bit about what makes a difference in people's lives.
Hi, I'm John Moore. My company is Moore Senior Benefits, and I've been in business doing Medicare for 7 years. I'm also a financial advisor for over 20 years. And I got into doing Medicare because my best client turned 65 and I wasn't able to help him. And I didn't like that. So I decided to add Medicare. I've really found my calling in Medicare. I can help a whole lot more people because everybody needs Medicare. And not everyone needs a financial advisor because they don't have the assets. So I would feel like I can help a lot more people. So uh, I'm also a veteran of the United States Army and help a lot of veterans with understanding how Medicare works with their benefits.
What happens to someone's health insurance as they start aging later in life and how it pertains to potential divorce?
Well, it really depends on their situation. If they're working when they turn 65 or their spouse is working and they have a good plan through their employer, they may choose to stay on that and defer their Medicare. If not, then we want to get them over onto Medicare if the plan is too expensive or the copays, deductibles, things like that are too high. We want to get them over to Medicare to get them a better plan. But deferring your Medicare has some potential hiccups in it that you have to be aware of, and you want to follow the right process to avoid getting penalized later, things like that. So when you go into divorce, if the primary or the one spouse is the employee providing the coverage for both, when the divorce goes through, they typically lose that employer coverage, which means they have to go on Medicare, and there's a time frame that they have to do that, and there's some processes that you want to follow to, like I said, avoid penalties, things like that.
John, what are some of the most common misunderstandings people have about Medicare, specifically during a divorce? You mentioned several different really important scenarios that divorce impacts regarding Medicare. What are some of the widely known misunderstandings?
So some of them are that Medicare is free. It's not.
Mhm.
Some people believe that it covers everything. It doesn't. Just like Social Security was never intended to cover all your living expenses, Medicare was never intended to pay for all your medical expenses. Um, Other misconceptions is that when you turn 65, you're automatically enrolled. That's only true if you're drawing Social Security benefits. So if you're not drawing Social Security benefits, you actually have to apply for Medicare to get it. And if you don't get it when you're eligible, when your initial enrollment period is, and you get it later, you can be penalized. Um, a lot of people also don't know about IRMA charges, which is income related monthly adjustment amount, which means if your income is too high, you pay more. And in a divorce, that can be very important because if you have a high income earning spouse and then you go on Medicare and then the divorce happens, your income drops significantly in most cases. Yet Medicare doesn't know that, so they're still Social Security still charging you that higher premium for your Part B, which is where I can help with clients appealing that to get that removed because divorce is a life event that allows you to appeal IRMA charges.
And one of the things you said when we first started off was, identifying gaps. What are some of the biggest mistakes individuals make when they transition off of their spouse's health insurance to something else?
Well, if depending on when the health insurance ends, if you don't start the process early enough to allow the government wheels to turn slowly, you can end up with your Medicare starting when it's supposed to, but you won't be able to get a supplement or an advantage plan to fill those gaps that Medicare doesn't cover when your Medicare starts. So, for example, if you find out that you're going to lose your coverage May 1st, and you haven't started the process yet, when you apply, it can take up to 3 months to get your Medicare approved. Now they'll backdate it to May 1st, but if you're in June already before you find out, then your other coverage can't start till July 1st, because everything in Medicare, all the supplements and advantage plans and drug plans all start the first of the month only. So you have to apply for it before the first of the month that it's going to start in. So that can leave a gap where you're just on original Medicare. And original Medicare has a lot of out-of-pocket costs. With Part A is your hospital coverage. With that, there's a deductible. It's $1,736 this year, and that covers you for 60 calendar days in the hospital, in and out as many times as you need, as many days in the hospital as you need. But a lot of people don't realize that deductible can be charged up to 5 times per year, because on that 60th day, if you're not in the hospital and you go back in another day, that's another deductible and another another benefit period, another deductible. And if you're still in the hospital after 60 days, then you start paying daily copays, which can add up. So if you go into the hospital and you're in there 150 days straight, you're paying over $60,000 out of pocket if you just have original Medicare. And then Part B only covers 80%, and there's no out-of-pocket maximum.
Wow. So what are some tips that, our listeners can kind of keep top of mind when they're thinking, I need to avoid the gaps in coverage? You mentioned, apply early. Are there just some quick things that they can try to keep in mind?
The first thing I would say is find a good broker to help you. I'm an independent broker, so I represent like 8 or 9 different carriers. Some brokers only represent one carrier because that's the only company they contract with. But it should never cost anybody to work with a broker. We cannot charge for that advice. And one of the biggest problems with brokers is a lot of them are fire and forget guys or girls. They'll enroll someone, and then the client will have a problem or a question. They'll try to call them, and they don't get a return call. Or they'll sign up with a call center, and then they have no clue who their broker is. So if they do have a problem, they can't get assistance other than calling the 1-800 number and getting a call center. So starting early, using a good broker that's going to take care of you. I give my cell number to every client of mine and tell them, call me if you have any questions or problems. Don't call the 1-800 number. Always call me first. If you can't get me, then call the 1-800 number, but I'm pretty good about responding. And that's how I try to differentiate myself from other brokers, is service and being there to help the clients. But there's no cost for it. They can do it on their own and get a plan, or they can do it through someone like me and get the exact same plan, the exact same coverage, exact same cost. The difference is now they have an agent of record that can help if there's a question or a problem.
You mentioned earlier that you have to enroll before the first of the month. So what are some of the other risks and timing when we're dealing with divorce? In particular, the initial enrollment period, how does that play in the divorce situation?
So the initial enrollment period is a 7-month window. It's the month you turn 65, the 3 months before, and the 3 months after. That's when anybody can enroll in Medicare. And that's when, if you don't do it during that time frame, penalties can accrue. And there's penalties for Part B of Medicare, which is your outpatient outpatient medical coverage. And for Part D, for prescription drug coverage, penalties can accrue. And once those penalties are applied, they never go away. They're there for the rest of your life. So if you have someone who's going through a divorce and is covered under their employer and they've already passed their initial enrollment period, there's a certain form that they can get signed by the employer's HR department saying that they had credible coverage. And back to one of your questions, Valerie, other misconceptions is the belief that, well, if I'm working and I have health coverage through my employer, I don't have to go on Medicare. That's true as long as it's a large employer. So as long as the employee group has at least 20 members, then you're okay. You can avoid those penalties. But if the employee group has less than 20 employees in the group plan, then it is secondary to Medicare. And if you don't get your Medicare, then that plan doesn't have to pay for your medical care. So it's very important to know what kind of group you're in as you're approaching 65 to make sure that you're okay deferring first. And second, that you follow the procedure to get it later so you avoid those penalties.
And John, does divorce impact that initial enrollment period? You mentioned earlier how divorce is considered a life-changing event. Does it change that?
No, no. The initial enrollment period is when you turn 65. That's what we call it, aging into
Period.
Medicare. So that doesn't matter if you're single, married, getting divorced, doesn't matter. That window is the same for everybody. Now, there's another initial coverage enrollment period that people get when they defer their Medicare, when they get their Part B later, then they get an initial coverage enrollment period where they can still enroll in other plans, make changes, get supplemental coverages, things like that, which can be affected by divorce in the situation where the spouse is working, they're covered under employer group coverage past 65 and then get their Medicare later. But that's the only time that I'm aware of that it would really affect divorce would really affect Medicare coverage because it's all individual based.
You walked us through an example when someone's in the hospital and there's, I think you said 5 different times you could be liable for a deductible. What other things in your experience have surprised people that Medicare just doesn't cover?
Well, a lot of people group Medicare A and B into one thing and just call it Medicare. So Part A has its own deductibles, its own copays, and then Part B has a deductible. It's only $283 this year, so that's not too bad. But after that, Medicare covers 20%, or I'm sorry, 80%, and the member is covered or responsible for the other 20%. There's also something called Medicare assignment that people aren't aware of. So when doctors choose to accept Medicare, they have to make another decision of, am I going to accept Medicare assignment or am I going to deny it? So if the doctor accepts Medicare assignment, then they bill the Medicare approved rates and Medicare pays 80%, the client pays 20%. If they deny that Medicare assignment, then they have the right to bill 115% of Medicare approved rates. And Medicare doesn't cover that other 15%. The client has to. So that can be a surprise. Now, 99% of doctors roughly accept Medicare assignment when they accept Medicare, but some of them don't. And so that can be a surprise for people if they go see a doctor and then find out, oh, they didn't accept assignment.
Are there any options to help people cover those gaps in coverage?
Absolutely. So there's two main options. Option one, they can do a Medicare supplement plan and a prescription drug plan. And then option two is Medicare Advantage. It's known as Part C of Medicare. So with a supplement, the most comprehensive plan available to people now is Plan G. So if they buy a Medicare supplement Plan G, then other than the premium they're paying for that plan, the only other medical cost they're going to have is a $283 deductible, the Part B deductible. The supplement picks up the rest of the costs. With a Medicare Advantage plan, they have co-pays, co-insurance, and an out-of-pocket maximum that they know their medical costs won't go over through that plan. But both of them have their advantages and they have their disadvantages. That's why it's important to sit down with someone who understands it and who's going to show them both. I tell my clients, my job isn't to make decisions for you, it's to educate you and show you your options. So if a client sits down and says, I only want a supplement, I'm going to say, okay, that's fine, but I'm still going to show you Advantage because I need to show you all your options. And if I don't show it to you, then I'm making the decision that you don't want it. And that's not my job.
Got it.
We're seeing a trend that divorces are happening later in life. Meaning, I've read that different articles all around, they're calling it gray divorce. So, in your experience or opinion, what unique challenges do you see as far as how that relates to healthcare?
So one of the biggest challenges is when you have, two people bringing in income, that income is at a certain level. With the divorce, that income usually goes down. But like I said before, Medicare doesn't know when that happens. They don't know that the income has gone down. So if they're being charged IRMA charges because together they have a high income, or they're taking money out of their retirement accounts, things like that, and it's pushing their income above the threshold, which this year the threshold is $218,000 for a married filing joint couple. But they're basing that number off of 2 years prior tax return. So in 2026, Social Security is looking at their 2024 tax return. So if they get divorced this year and the income goes from $250,000 down to, 100,000 for that uh, client, they're still being charged the charges as though they were making $250,000 a year joint. So that can be a surprise for them when they get divorced, their income goes down, and then they're still having to pay that higher Medicare charge, which is why having a broker helps, because we can help them understand that they can appeal that with a divorce and try to get that removed.
Yeah, John, as Dan mentioned earlier, I'm a litigation attorney based out of San Antonio. And I always like to, when we have these conversations with professionals such as yourself, ask how can we work together for our mutual clients in the field of Medicare and coverage, especially in divorces later on in life.
The biggest thing you can do for your clients to help them with this is put them in touch with a broker that's going to educate, that focuses on education, not sales, because there's a lot of them out there that are out to make the sale. I try to build a relationship with my clients, because a lot of people don't know the way we get paid is when we enroll someone, we get paid by the insurance carrier, and we get paid as long as that client stays on that plan. So my goal as a broker is to get clients on a plan that works for them and keep them happy, so that they don't take those phone calls and don't talk to other brokers and that are going to change their plan and may or may not be doing what's in the client's best interest. I always want to make sure I'm doing, with a background in financial services, I always want to do what's in my client's best interest. So I just carried that over when I started Medicare into my Medicare business and said, hey, I'm going to do things the same way. I'm going to make sure I'm doing what's right for the client, because happy clients refer their friends, happy clients stay on their plan. And it's in my best interest financially to keep clients on their plan and keep them happy. Now, when it comes to carriers, it doesn't really matter which carrier they choose, which insurance company they choose, because it's all regulated. So if they do an Advantage plan with United Healthcare, Humana, Aetna, Blue Cross Blue Shield, whoever it is, I have no vested financial interest in one carrier over the other, because I get paid the same regardless of which company it is, which I think is a good thing, because then I'm not being approached by carriers saying, you need to sell ours because we'll give you an extra $50 a year per client.
That's a great point. And it really made me think, if we're not talking about healthcare planning, then, speaking with our own clients, we want to talk about the risks associated that may arise, even if there's something else going on. A topic that's considered during, what's a topic that's considered during divorce settlements?
Well, the big risks are, one, they could end up paying a lot more per month for their Medicare. If they're already on Medicare, then their plan isn't going to change with a divorce. Whatever plan they were on before is going to stay the same. However, if you have a situation where one spouse handles all that and the other spouse doesn't really know what's going on with it or have a lot of information on it, that can be a surprise when they're on their own and all of a sudden they go to the doctor and start getting bills or having to pay co-pays or whatever it is, because they weren't aware of it. Which I always encourage my clients, when there's two of them, that they both participate in the process, so that they know that, because people pass away, people get divorced, things can happen. But and then the other surprise that can happen is, once again, if they work past 65 and stay on employer group, when that divorce happens, they're going to lose that employer group unless they're the employee, and that can cause all kinds of financial surprises.
What stage would you suggest clients who are contemplating a divorce or know that they're going to begin the process, what stage should they consult a Medicare advisor?
Well, what's the I'll ask you a question. What's the average time frame that it takes when they start until a divorce becomes final? I know it's
Well,
varies depending on the client, but
yes, everybody would love for this to be the case, but there's a 60-day waiting period in the state of Texas, so definitely no less than that. But on average, about 6 months to a year or more plus. Yeah.
so it would be a good idea, as soon as they start the process, to at least sit down with someone to get an education on what's coming. Um, Definitely by the time the divorce is filed, they need to have sat down with someone, because that gives you a 60-day window to get things figured out, which should be long enough in most cases, unless you have a unique situation, like a naturalized citizen that would have to provide paperwork proving that they're a citizen now. That type of thing can slow down the process. But it's never too early to figure it out and sit down and get educated. I like when clients are turning 65, I like to meet with them when they're 63, turning 64, just because I can explain IRMA charges. I can tell them what could come down the road. We can start making plans. Great example, I have a client that I sat down with who was doing a lot of Roth conversions. So he's moving a lot of money from traditional IRA to Roth IRA. Well, that bumps up his adjusted gross income, which then affects his Medicare premiums later. So getting in front of that early can say, hey, maybe you don't want to do as much because you want to stay below this threshold. Otherwise, you're going to be paying a lot more per month once you hit Medicare age and start Medicare.
And how can people reach out? I mean, all this information was great. How can people reach out to you to get the help that you can provide?
Well, my phone number is 210-621-7842. My email is johnmoore@simpleseniorbenefits.org. And there's a website. If they go on there and look up more senior benefits, I'm on Google. They can find me there. And that's the best way. Email, text, call, or online.
So, John, I want to thank you for joining us today. It's great talking about these issues. I think, in the zeitgeist right now, health insurance is top of mind for everybody. But for some reason, when we go through divorce, a lot of people kind of gloss over it because it's always been there. And they don't think about the day that it won't be there. So if you or somebody you know is going through divorce, really think about the health insurance and how financially detrimental it can be if you don't properly plan for it, and get an expert like John and Malone Hatley PC on your side. Thank you for listening. If you like this episode, please hit like or subscribe and share it with your friends, because our goal is to try to provide as much information on divorce as we possibly can to help everyone to that next step in their life.
Give us a call and set up a free consultation with one of our client service coordinators today.